Welcome, everyone. My guest today is Lead Analyst Logan Mohtashami to talk about the possibility of quantitative easing under a new Fed chair and the potential impact on mortgage rates. Before we dive in, I want to thank our sponsor, Trust and Will, for making this episode possible. Logan, welcome back to the podcast.
It is wonderful to be here, still in Texas. I have no idea what time it is, but it's a beautiful day. Got an American flag right in front of me. Got the Texas flag right in front of me. So I'm good to go. And we have an interesting topic today.
Yes, we do. You know, in Texas, we like to have giant Texas flags everywhere, if you've noticed.
Yes,
giant
I've
ones.
seen some of those giant flags. I know we have to have one of those, carried on stage, a big flag,
That'd be amazing. Okay, so our topic today is really interesting because it feels like we are getting narrowed down on who might be the next Fed chair. Is that your, and that's Kevin Hassett, is that your feeling?
There was so much talk with the Powell Department of Justice, and now that, there's a pushback against that, and they're not going to let the new Fed new chairman get picked. And I thought the Rick Reeder thing was just a distraction. I don't think that was anything serious. But one of the things that is starting to happen is people think that if there's a new Federal Reserve chairman, and let's say somehow they get maybe one or two new governors, that the Fed is going to start to do QE again, quantitative easing. And that's not a thing. So today's going to try to bring a little bit of reality to what can or can't happen.
Okay, first thing, what is quantitative easing so that people who don't know what you're talking about, they understand why this would help or hurt?
What a lot of people think about is post the great financial recession, the Federal Reserve did bond buying and mortgage-backed security buying to push rates down. But I think what people forget is that we had zero interest rate policy back then, right? We had zero interest rate policy during COVID. Rates did tick up a little bit, or the Fed funds rate did tick up a little bit in kind of the 2017, 2018 timeframe. And mortgage rates did get up to 5%. I think it was November 8th, 2018. The 10-year yield was at 3.25. I remember because I was debating someone on that day, and I said, okay, this is the peak of the 10-year yield. We're going to have like a 4 handle on rates next year. In any case, the Federal Reserve is not going to do QE.
Okay, what is QE? What
people think of QE as bond buying to drive down yields and mortgage-backed security purchases to drive down the spreads. The spreads got better kind of on their own, which they normally does, and the Federal Reserve doesn't really have to be a part of it. But
they got better when?
Just since the end of 2023. So I think the confusion with the spreads is that a lot of people thought that mortgage rates only went lower because of the MBS market. That's not true. That has actually never been true for decades. I always joke that, the Federal Reserve was selling its mortgage-backed security portfolio from 1971 to 1980, and then they bought it. No. Fed policy, nominal growth, inflation expectations. There's all these things that go into Fed policy and where the 10-year yield can range in or mortgage rates. But to me, it's a lot of people think that if Powell's replaced and they get few Fed governors, that they're going to do major bond buying and more mortgage-backed security buys to drive rates as low as possible. They have stated this from time and time again. The Federal Reserve doesn't even believe in quantitative easing or buying bonds like they did back then. I know a lot of people get confused because they see the Fed doing some purchasing now. They think that's QE. That's not QE. There's going to be no direct push there unless they can absolutely get so many votes and just change the whole paradigm of how the Federal Reserve operates. So for people that think that rates are going into the 4s or something like that, without the labor market breaking, that's just not how it works. And as we get closer to the Davos speech where they talk about, what they're going to do for housing, and we get a new Fed chairman and they're going to go after maybe Fed governors, kind of, be realistic where you think rates can go. with Fed policy and the labor market and inflation and nominal growth, those things.
I think this is such an important topic because number one, I hear people ask you about this all the time when we're at events. They're like, hey, are they going to start quantitative easing? Number two, been very confusing since Fannie and Freddie were directed that they can do bond buyback. That's not the same thing. And then three, people are like, well, but Trump does things really differently. So could he just start doing this? Yeah, maybe under Powell we wouldn't do that, but to your point, if you get a whole change of regime there, would that happen?
I'm pretty sure Trump's not going to use the tariff revenue to buy, bonds. So I think that's not going to be the case. The thing is that the 10-year yield just is moving that range, right? And if the labor data didn't get softer, we really wouldn't even be down here. But now that Fed policy has had a lot of rate cuts in the system, and the labor data isn't exploding higher, it makes sense that this is kind of we're closer to the bottom of what realistically can happen. And for a lot of people don't remember this, but even Besant talked about kind of getting the 10-year yield to 4 or a little bit under 4%, is something achievable. But there's not going to be an active quantitative easing to push rates lower. And what happens is that the Fed balance sheet has come down so much that they make sure there's enough reserves for this banking system. And we have a huge banking system, trillions of dollars in here. So now that their balance sheet has reduced so much, and just remember, rates went down with the balance sheets going down. A lot of people say rates could never go lower if the Fed cuts its balance sheet. No, it did. It's just Fed policy and economic data. But for them to actually start purchasing again and to drive rates down, I just don't think that's in the cards. Even if Hassett comes and talks about it, they really need to change the entire regime. There's going to be such a pushback against that by Federal Reserve members that aren't on Hassett's side that it'd be difficult for them to try to attempt that without zero interest rate policy.
So remind our audience of your mortgage rate range for 2026.
We work off the 10-year yield first. Same thing, bottom is 380, right? If we go below 380, that means the market really thinks we're going into recession or something like that. That happened in 2024, and we quickly reversed. So 380, 5.75. Now, we could get 5.75 mortgage rates if we get to the bottom end of normal spreads today. So that's not anything big. Now, getting up to 6.75, we don't have a 7 handle anymore because the spreads are better. 460 on the 10-year yield on the upside. This means that the labor data starts to really kick in. Inflation is not going down lower. You put those two things together, you can get the 10-year yield back up in that range. But since the spreads are better, it's hard to get mortgage rates above 7% in that environment because we had basically a 50% improvement toward the end of the year. And now we're buying mortgage-backed securities by Freddie and Fannie. So we work off of that range. You get normal spreads. You could get down to 5.75 today. If the labor data starts to get worse, that line breaks. The corridor line should break if the labor data gets better. And then maybe, Sarah Wheeler, we might maybe have to bring Gandalf the Gray back. For those who don't know, in 2023, there was the 10-year yield got to 3.37. I was like, man, we really shouldn't be here or break underneath this unless we're going into recession. I don't see the recession yet. So just to reinforce my belief, I said, I'm just going to bring Gandalf the Gray out memes and just go, you shall not pass. And I still can't believe that we tested that level 8 times and it didn't really break. At one time it broke a little bit, but it didn't go lower because we weren't going into a recession. A lot of people thought we were. Now at 380, I call it the Hodor line, right? Game of Thrones, hold the door, right? And for now, we really haven't even tested that. So always remember, spreads getting better could get us sub 6% back to the low end of normal. And if the labor data gets softer, jobless claims rise, you can get there. But without that, rates look about right. If you look
right around 6, huh?
Yeah, we're with the Fed funds rate where it is, we're going to neutral policy. Inflation is still above target. This looks right to me. It would look wrong to me if the 10-year yield was at 3.25 and mortgage rates were at 5%, I'll be like, okay, the bond market really thinks we're going into a recession, or even above 460, be like, oh man, the economy is really rolling now, right? You get higher yields if it's not currency induced inflation. It means economic growth is really kicking in, and so for now we're at the bottom end range, but be a little bit realistic to this conversation that if there's a new Fed chairman, they're going to start doing QE to push rates down. It's not that easy. And plus, I think whatever dovish Fed members you had in your group about rate cuts, they might go against that mindset now, because that's something they do not want to do unless there's zero interest rate policy. And they have adamantly said that time and time again. That's not going to be something they're looking into.
So the labor data is still so important. Anything this week that so we're recording this on Friday at the end of this week to go live on Monday. Anything this week that changed your mind on labor?
Jobless claims looked good again. It's under 200,000. So as we've said, if there's one ring to rule them all, there's one labor data, and it's jobless claims. If jobless claims were at 300,000, we're all having a different conversation, but it's,
we're pretty far from that right now.
Pretty far from that. We broke under 10,000 or under 200,000. So we're still far from what we call the labor market breaking, right? The history of economic cycles, jobless claims start to go vertical. No, it's linear. It's just boom. And then the unemployment rates rise and jobs are being lost. So the Fed is mindful of that, but they really focus that there's just not a lot of firings in big scale terms. So I think in that context, we are in a good place right now. The question is, how are things going to be so different with a new Fed chairman? And the number one thing is no more hawkish Powell talk, right? We said that in an event in Texas, and people were standing and cheering because, as you can imagine, you're not going to have that anymore. You're going to have a Federal Reserve chairman who's probably going to go after the hawks. So it's going to be a complete twist around on this. As long as Trump's president and Hassett or Kevin Warsh is there, that person's probably going to go against all the hawkish people and says, hey, we need more rate cuts. We need this. And it's going to get really interesting. But, come May, things will change. But any day now, we could get an announcement on who it'll be, and we'll work it from there. To me, Trump likes loyalty. And he kind of likes how Kevin Hassett defends him, so it looks like that to me. I mean, I'm a Christopher Waller person,
You'd rather have him as Fed chair?
No equivocation whatsoever. Christopher Waller 24/7. But Hassett and Kevin Warsh will have their own set of issues in terms of the U.S. government and senators might think, okay, he's just a yes person for Trump, and that's just what Trump wants.
I like the way you've set up the range and also, advise people about it's not going to be QE, but in your forecast, in the 2026 HousingWire forecast, you do have that X factor, which is what you just talked about. And so you have a range, we have all these things that make sense. And then you have the X factor, which is, Trump's housing policy could change things.
Speaking of which, we're talking about 24. And then next thing I know, I see Keith Sutherland actually get arrested for threatening an Uber driver. And of course, that's not a funny thing. But what if he did it in Jack Bauer voice? Do you think he actually would do that? Let me go now, or I'm going to. I mean, do they ever leave character? If I was Keith Sutherland and I'm saying that, I'm thinking I'm going back to Jack Bauer right now and doing that. So I'm like, when did that happen? Literally right after our podcast, I see a tweet that Keith Sutherland gets arrested for threatening to kill Uber driver.
Also, if I'm an Uber driver and Keith Sutherland gets in and he's unhappy with me, I'm just going to be like, okay, what do I need to do to make sure you're okay?
Yeah, but I was like, wow, how the timing of that. See, the Lord is telling us it's going to be a 24-year, and he even brought Jack Bauer out to threatening to kill an Uber driver who's probably, Russian or Iranian or something like that. And we don't even know about it because it's the season of 24.
Well, okay, let's say he's accused of that, allegedly doing this. We know nothing about it.
Okay, he's not, right. But I just thought about it. What if he did in the Jack Bauer voice,
What if he did? It's going to be a wild year. Logan, thank you so much for being on. I did want to say to our audience, The tickets for the Housing Economics Summit are about to go up. You guys do not want to miss this. Logan's going to be on, keynote speaker Barry Habib. Then Logan and Barry are going to be on stage together. I'm going to moderate a discussion there. We've got tons of amazing economists coming, and then also sessions where we're going to take that and say, okay, that's the economic take. What's the tactical move now that companies should make based on that?
By February 10th, we're going to get a lot of things answered. So that'll be very interesting, having a host of different economists out there, the NAR, Blight, First American, Mike Simonson will be there as well. So by that time, we'll have enough data in the tracker to kind of get a sense of what's going on early. So very fortuitous timing. I just got to make sure Jack Bauer is not my Uber driver, and be like,
as you go to the airport. Well, safe travels, Logan. We will talk again soon.